Gold keeps going up. Every time you open the news, every time you scroll social media, every time someone shares a screenshot of gold prices, you see the same thing, higher, again. And at some point, a quiet question starts to appear in your mind. Did I miss it? Am I already too late? Should I have started years ago? If you're in your mid-20s, 30s, or even early 40s, this feeling hits differently. Because this is the age where reality becomes loud. Bills are real, responsibilities are real, and mistakes feel expensive. So when you see gold prices climbing higher and higher, it doesn't feel exciting, it feels intimidating. Today, we're not here to hype you up. We're not here to promise fast profits, and we're definitely not here to say, just buy now before it's too late. This video is about thinking clearly when emotions are loud. Because the worst financial decisions are not made when prices are low. They're made when fear and regret take control. Why gold feels scary when it goes up? Let's be honest. Gold feels safe when it's cheap. Gold feels scary when it's expensive. When gold prices were lower years ago, people said, "I'll buy later. It's not urgent. I need cash for other things." Now that prices are higher, people say, "I should have bought back then. It's too expensive now. What if I buy at the top?" This psychological trap has a name. It's called regret bias. You're not afraid of losing money. You're afraid of feeling stupid. You're afraid of looking back one day and saying, "Why did I buy at the highest price?" But here's the uncomfortable truth. Most people don't miss opportunities because they're too late. They miss them because they wait for perfect certainty. And perfect certainty never comes in finance. A quick reality check. Let's pause for a moment. Gold is not trending because of hype. It's not going up because of influencers. It's not moving because of quick money culture. Gold moves because trust in money keeps declining. Inflation eats purchasing power. Currencies lose value quietly. Savings accounts barely protect you. Gold doesn't grow fast, but it survives when systems shake. That's why central banks keep buying gold. That's why wealthy families hold gold for decades. That's why gold is boring and powerful. So when gold prices rise, the real question is not, is gold too expensive? The real question is, what is happening to money itself? The biggest myth, I'm too late. Here's something nobody tells you. Most people who say they're too late are actually saying, I wish I had started earlier. And those two things are not the same. Being late means the opportunity is gone. Regret means you didn't prepare when you could. Gold is not a lottery ticket. It's not a one-time event. Gold is a long-term protection tool. If you are in your 20s or 30s, time is still on your side, not because prices will always go up, but because you can still build habits, and habits matter more than timing. Why waiting feels safer but isn't. Waiting feels logical. People tell themselves, I'll wait for a correction. I'll wait until prices drop. I'll enter when it's safer. But here's the problem. When prices drop, fear increases. When prices rise, regret increases. So people wait forever. And slowly, silently, inflation keeps working. Your money doesn't disappear dramatically. It just loses power quietly. That's the most dangerous loss, the one you don't feel immediately. If this conversation feels uncomfortable, that's a good sign. It means you're thinking seriously about your financial future. If you want more calm, honest discussions about money, not hype, not fear-mongering, just clarity, subscribe to this channel, because the goal here is not to make you rich fast, but to help you stop making avoidable financial mistakes. Now, let's continue. Gold is not about profit, it's about peace. One of the biggest mistakes people make is expecting gold to behave like stocks or crypto. Gold is not here to excite you. Gold is here to stabilize you. It doesn't make headlines when things are calm. It shines when everything else feels uncertain. That's why asking, will gold go up next month, is the wrong question. The better question is, will my purchasing power be safer over the next 10 to 20 years? Gold is not meant to replace your income. It's meant to protect the value of what you already earned. And that mindset changes everything. The real risk is doing nothing. Let's be very clear. The biggest financial risk for most adults today is not volatility, It's inaction, not saving, not projecting value, not building any buffer. People are afraid of buying at the wrong time, but they're not afraid of staying unprepared. And that's the real danger, because when a crisis comes, you don't get time to prepare. You don't need to be perfect. You don't need to go all in. You don't need to time the market. You don't need to chase prices. You need one thing: consistency. Small amounts, regular habits, long-term thinking. That's how gold works best, not as a reaction to fear, but as a quiet discipline.
Part 2. So, what should we do now? Let's shift the question. Instead of asking, is it too late to buy gold, ask this instead. What happens if I don't start at all? Because time doesn't pause while you're thinking. Bills keep coming, inflation keeps moving, life keeps demanding more from you. And slowly, the cost of waiting becomes higher than the risk of starting. The difference between investing and protecting. Most people misunderstand gold because they look at it through the wrong lens. They look at gold as an investment. But gold is not primarily an investment. Gold is protection. It protects you from inflation, currency devaluation, economic uncertainty, your own financial panic. Gold doesn't promise growth, it promises resilience. And that's why gold feels boring to people who chase excitement, but comforting to people who value stability. Why gold always feels expensive in retrospect. Here's something interesting. Every generation thinks gold is expensive. People in the 1990s thought gold was expensive. People in the 2000s said the same. People 10 years ago said it's already too high. And yet, decades later, gold is always more expensive than before. Not because gold magically grows, but because money loses value. That's the part most people miss. Gold doesn't move up dramatically. Money moves down quietly. So when you say gold is expensive now, what you're often saying is my money is weaker than it used to be. Starting late is still better than never starting. Let's be real. Yes, starting earlier would have been better, but starting today is still infinitely better than starting someday, because someday never arrives. There will always be another expense, another emergency, another excuse. Waiting for the perfect moment is just a sophisticated form of procrastination, and procrastination is expensive in finance. You don't need a lot, you need a system. This is where most people overthink. They believe they need a large amount of money, perfect timing, deep market knowledge. You don't. What you need is a system, a simple habit. Buy small amounts, do it regularly, ignore short-term noise. Gold rewards discipline, not intelligence. You don't need to be smart, you need to be consistent. Why small steps matter more than big decisions. Big decisions are emotional. Small steps are sustainable. When you start small, you reduce fear, you build confidence, and you learn without pressure. Most people fail not because they start too late, but because they start too aggressively, then stop completely. Gold works best when it becomes boring, when it's no longer a big decision, but a quiet routine. The peace nobody talks about. There's a kind of peace that doesn't come from income. It comes from knowing you're not completely exposed, knowing you have something that doesn't depend on your boss, doesn't depend on your job, doesn't disappear when systems fail. Gold doesn't solve all problems, but it gives you mental breathing room, and mental space changes how you live. This is not about becoming rich. Let's be very clear. Gold is not about becoming rich. It's about not becoming poorer without realizing it. It's about preserving effort, respecting your past work, protecting future options. And that's a very adult mindset. The real question you should ask yourself. So instead of asking, am I too late for gold? Ask, do I want to be more prepared 5 years from now than I am today? If the answer is yes, then the timing is not the problem. The decision is. If this video helped you think more clearly about money, not with fear, but with perspective, like this video. It helps this message reach people who need it. Subscribe to the channel if you want more honest, grounded conversations about money, life, and long-term thinking. And most importantly, don't wait for the perfect moment. The perfect moment is rarely comfortable. It's just the moment you decide to stop avoiding reality. Gold will keep moving. Time will keep passing. The only real question is, will you move too?